Good morning, everyone. So I will try to take you over through the compliance requirements in the capital market. So I'll start with the first slide. Now, talking of directly on the audits, I have come across that for professionals, what's the opportunity and what are the compliance requirements for the stockbroker for the various people. I have tried to cover more on the stockbrokers and the depository participants. Then, in addition to the stockbrokers, they have multiple registrations. So, I have tried to cover them in the later part of the. So, now talking about the audit requirements as applicable for the stockbrokers, we have this and the depository participants. We have this periodical, I would say, requirements on a monthly basis. They would like to have a confident audit of the risk to be done. So depositories basically function as well as banks. They are trying to say control the securities of the various clients, and as they are do secure say controlling the securities, it's very important that proper audit process is being done so that nothing goes wrong. People are like holding securities worth crores of rupees, and if there is any lapse in the system or the process, then the things will become very uncomfortable. For that purposes, the regulators have specified a monthly confident audit to be done for the participants, and these audit reports have to be submitted before the 10th of every month, and they have to be given to the management of the depository. It is not to be submitted to CDSL or NSDL, but it is given to the depositories only, depository participants only. And on the basis of the observations which are brought out in the notice of the depository participants, they are required to take corrective action. Then we talk about the half yearly audit requirement, where there is an internal audit report which has to be submitted by the stockbrokers as well as the depository participants. Depository participants internal audit report was supposed to be given within 45 days of the completion of the half year, but currently because of the COVID, the current extension has been given up to 30th of. Similarly, for the stockbrokers, the due date initially used to be 2 months after the completion of the half year, but on the grounds of COVID, it has been currently extended to 30th of. So that's what is required to be given. Then you have a systems audit to be done by the stockbrokers. Now, system audit requirement has been is depend on the category of the stockbroker. There are certain brokers who have a small setup. In that case, if they're using any CTCL or any software which is there, then they are required to carry out the audit once in 2 years. However, if the broker is a big mid-size, then they are required to carry out the audit once annually. However, there are stockbrokers who use algo systems, and once they are using algo, then they require to have an audit conducted every 6 months. So that's how this half-yearly audit system audit requirements is for stockbrokers who use algo systems. Then talking about the cyber security audit. Now, the requirement of cyber security has actually come in from 1st April 2019 only. Now, I think so probably the exchanges and regulators were very much concerned about the cyber part. And currently, like when people are trying to work from home and a lot of things are being done electronically, cyber security audit plays a very important role. So cyber security audit also depending on the parameter of the stockbroker. As I said, if it's an algo stockbroker, then he is required to carry out an audit every 6 months. And the requirement of carrying out a cyber audit has actually got applicable from the 31st March 2020 onwards. That means for the current period, there will be the first system cyber audit report which will have to be given. Now for the systems audit as well as for the cyber security audit as well as the internal reports have been specified by the exchanges. So every auditor is basically required to use the same template or the audit format which has been given over. and then he has to specify his observations, sampling, and various other aspects. Then we have a net worth certificate requirement. The net worth certificate has to be given every half yearly. In the sense, for 30th September, it has to be given within 2 months of the end of the half year. However, currently the due date has been extended for 3 months up to 31st of June. Then, in case you have something called as MTF, that's called as marketing. Some of the brokers, some of the brokers, some of the brokers are also providing margin trading facility to their clients. And when they're providing margin trading facility, they are required to give the net worth certificate within 1 month of the completion of the half year. So that's how we have the requirements of the half yearly audit submissions. Then coming down to the part of annually, in case of system audits, as I said, when there are mid-sized brokers, they'll require to carry out a systems audit and give what has to be done annually. The annual period is basically from April to March. So in the month of June, July, the due dates get applicable. Talking about the due dates for the systems audit, basically it is 2 months or 3 months. But considering the COVID, currently the due date has been extended up to 31st of July for submission of the system audit report as well as the cyber audit reports. Cyber audit has to be conducted by the repository participants also. So that is also a good opportunity for the systems auditors now. In addition to this, there are annual reports which have to be submitted. They normally are required to be submitted in 6 or 7 months. It could be 30th September or 31st October as a due date. Where the annual return is a document where you specify all the financials as well as you give an update on the current shareholding pattern and various other aspects which are existing in the depository as well as at the stock broking organization. Then you have an annual audit to be conducted for research activity. If any stockbroker is also registered under the research regulations, then they have to carry out internal audit. Similarly, is a requirement for investment advisors audit also. Then multiple things. And as I said about the net worth certificate, the net worth certificate is like, they ask for an unaudited net worth certificate from the stockbroker with 2 months of the completion of the financial year. So normally it has been 31st May. However, currently it has been extended to 30th June. And the audited net worth certificate has to be given within 6 months of the completion of the financial year. So that is basically 30th September that the stockbrokers and the depository. Now, the very important part in the course of net worth certification is that there are separate formats which have been given by the exchanges. We normally have NSE and the BSE as the two main exchanges. Also, there are MSCI also, and now the commodity exchanges have also got named as a stock securities exchanges. So we have NCDX, we have MCX. So there are multiple exchanges. Normally, every auditor who is trying to certify the net worth are required to be very careful that they are trying to use the proper format. We normally have something called as the LC committee format, which has to be used by the brokers, and chartered have to be very carefully seeing all the deductions, how it has to be done, and those aspects. Earlier, BSE used to specify some other format for very small brokers which they used to have. However, that has also been given away now. Now everyone has to technically use the LC committee format for giving the net worth certificate. It has also happened that normally a statutory auditor used to give the net worth certificate, and initially as an internal auditor, we were required to just comment whether the net worth certificate has been submitted or not. However, now it has also happened that they would like the internal auditors to vouch whether the net worth certificate given is proper or not. So it has also happened that we had certain level of observations where the network certificate calculations were not proper. Then this was brought to the notice of our auditors, who then further, clients, who then further informed their statutory auditors or their chartered accountants who had signed the network certificate, where, like, there were errors in the calculation of the network. Further, one more point remains is that whenever we have any negative point coming on the inter-audit reports, the exchanges have started charging a penalty. There's a 1,000, 2,000 rupees penalty which gets charged to the brokers. So it's very important that we give our reports very carefully. One thing is, as an auditor, they are trying to ask us about our methodology of auditing, as well as any negative remark comes out, then it affects the credibility or the rating of the stockbrokers, particularly coming down to institutional stockbrokers who have to give a status report to the institutions where they are registered or empaneled for doing stockbroking for these institutions. They are required to be the institutions expect that the brokers with which whom they are dealing are having no negative comments. So at that time, it's very important that the internal audit gets done in a proper manner, and accordingly the final submission of the report does take place. Now I'll go ahead on the audit requirements which are there on a it's on a need to case basis. It's not a time bound activity. Then we have something called as there are systems audit report which have to be given before starting any front end software. What are front end softwares? Basically, if you look at any stockbroking organization, there is something called as a front end. There is something called as a mid office, and there is something called as a back office. Front office is basically the inputting of transactions in the exchange platform. Now, the exchanges used to give a limited number of machines only, or the people were, when they wanted to expand their operations, they were looking at something called as a CTCL, that's called as computer to computer link, in which case you were actually trying to use some another front end software, which was used by stockbrokers, and those front end software used to help them in their transactions which being made from multiple machines, and and that's how the trades used to go very high. So if you have a system, so in any stockbroker who is interested in having any front end software implemented, then he is required to carry out a systems audit report, which has to be also submitted prior to he being given the permission to start that front end software. Now, in the case of this systems audit report, it depends. There are two different formats which have to be given over. There is one single page format, which is used in case the software is being bought from any empaneled auditor, empaneled developer. Empaneled developer basically means a developer whose software is in use by more than, hello, yeah, where the software is in use by more than 10 to 12 stockbrokers. At that time, as the functionalities of the software have already been tested at multiple client places, the exchanges don't insist for a detailed report. So that time, any auditor will be required to just give the certificate, which has to be given in a specified format. There are different formats, although the format looks the same, but there are different annexure numbers which are there for the BSC, for the NSC, as well as for the MCX, NCDX, means all the exchanges I'm talking about. However, in case where you're trying to buy a software which is not from an empaneled vendor, then those softwares get accounted as in-house softwares, and in case of in-house softwares, you have to give that certificate. And in addition to that, there is one more, what's say, an extra which has to give a certificate, which is of a detailed format, where the what say certificate could be from 8 pages to 18 pages over, where you are required to cover various points of the software's capability and which have to be reported over. These all are as per the exchange formats. So a person can have an option where they can get those formats downloaded and go through and study through it. Then we come down that whenever we have any non-compliance observed, then the exchanges normally insist that you get a certificate from your auditor that this particular non-compliance which you observed has got resolved. Even when we try to give our internal reports, we might have cases where we would have specified something as a non-compliance. Then the exchange sends out letter asking for the compliance of that particular non-compliance point which was observed by us. So those all will require a certification from the auditor. Am I audible? Is it fine? Am I comfortable?
Yes, yes.
Yeah, very
Am I?
much.
Yeah.
I can
Continue.
hear you.
Okay, fine, great, thanks. Okay, then we have even something called as an action taken report. This is applicable in case of systems audit. When we carry out a systems audit, we might have a situation where we might have specified something as non-compliant or not fully compliant. Like there are ratings which a stockbroker, which an auditor has to give. Normally, it could be something called as strong, medium, or low. So in case if you have specified somewhere as low or a medium quality of or risk rating, then they insist that there should be an action taken report from the broker.
Sandeep, your voice is going off.
Voice is going off. Okay.
Yeah, now it's okay. Yeah.
Oh, fine. Yeah. So we have to give something called the action taken report in case if any in a system audit report we are given as specifying that there is a risk which is high or it's not fully compliant, then an action taken report has to be given, which is again required to be certified by the systems auditor. And in addition to this, other than the audit requirement, the opportunity for stock with reference to stockbroking audit is high. Reason being, there are a lot of regulatory changes happening, and we as auditors do support our stockbroking clients in helping them, hand holding them to update with the regulatory changes. So that's where an opportunity lies for various auditing firms into the stockbroking space. Now, further, I'll go to the next area. Internal audit of the stockbroking activity. It's more like you're trying to look into the stockbrokers' operations and then give a report. So here I've tried to cover the stockbrokers' responsibilities which are there. So this all operational responsibility of the stockbroker are something which, as an auditor, I have to check and certify. So again, there are audit report formats from the exchanges where they run around 170, 180 points which have to be checked by the auditor and reported over. So summarize them in these 3 slides where I am trying to talk about. Is it fine? Am I audible? Okay.
Yeah, we can hear you.
Go ahead.
So,
The thing is that a lot of people background noise is coming.
yeah, I agree. I am also not able to understand. Okay. Okay. Now, with reference to the stockbroker's responsibility, the activity how a stockbroker starts is he has to comply with various SEBI application forms. They have to, the application forms are given by the exchange to SEBI. Means the broker has to make an application through an exchange to SEBI. SEBI will normally try to interview the stockbroker, get their comfort about the stockbroker's intent of being the stockbroker. and after they are comfortable, then they give the registration to the stock. After the registration is done, the stockbroker to start the operations has to comply with various set of formalities, where they will open a demat account, where they'll open bank account, where they will get the internet, the connections, technological connections for getting their terminals started with the exchange. So all these formalities are there. I am not trying to cover them. I am trying to cover the stockbroker responsibility ahead as relevant to the auditor's perspective. So I'll start the first part. The first thing comes over is the client registration. Now, every stockbroker is technically required to enter into the KYC, take a KYC for his client. So there is a KYC which the stockbroker will take, where the client will share all the information pertaining to itself. Then there's something called as the KRA. KRA stands for KYC Registration Agency. These are agencies which have been set under the SEBI regulations, basically with the objective that when a person is already registered on the KRA, and if he wants to open his account with another stockbroker, then he will not spend time giving all the documentations again to the new stockbroker. As his information is already available on the KRA, the second stockbroker can directly go to the KRA and download that information. Further, this KRA documents for a client, if he is not registered on the KRA, has to be uploaded by the stockbroker within 7 days time period. He has to see that he has completed his responsibility of uploading the KYC information on the KRA. Then we have something called as CKYC. CKYC is again a centralized KYC option which has been initiated more by the finance ministry, where the information of the client has to be uploaded on the CKYC also. CKYC basically is set up done where even banks or say stockbrokers, mutual funds, all are required to upload the information. In case of KRA, the information was required to be uploaded only by the SEBI registered intermediaries, which was basically mutual funds and stockbrokers. But CKYC also covers banks also. So as a stockbroker, I am basically responsible to upload the KYC details at both the places, at the KRA also and the CKYC also. And I have to even check that suppose if an existing client of mine who has come to me, whether he is registered already on KRA and CKYC or not. Why? Because SEBI has been insistent that if any person is registered on the KRA agency already, then the second stockbroker should not ask for the information which is already available on the KRA details. Then we have something called the IPV, which is in-person verification has to be done to certify that that particular person was alive when he's existing. In addition to the KYC, you even have certain agreement or documents which are required to be taken. Now we have something called the mandatory documents which are certified by the specified by the stock exchange or the regulators, which normally would include your rights and obligations and those details. However, for smooth operations of the client's transaction with the stockbroker, there are some voluntary documentation also which are taken over. This voluntary documentation could be like I taking an authority for maintaining a running account, or it could be that I would like to send the documents electronically. That's called as the ECN, electronic contract note. So all this part comes as documents comes as a part of voluntary document set for the registration of the client. Then once I've taken all these details, every stockbroker is required to give something called a UCC. That's a unique client code that would indicate a code which the stockbroker is giving to his client. And why it is called as unique? It means that that stockbroker will give that particular code number only to one person in his organization. There could be cases where where one person can have the same code with multiple stockbrokers. Like suppose I might say that I want my transaction code to be S123. So I can have that S123 with Angel also, with Motilal also, and with India Infoline also. Subject to those three stockbrokers should have not given the same code to somebody else. So that's what is the concept for us is unique. Unique client code vis-a-vis the particular broker. And there's something called the FATCA. FATCA is your Foreign Assets Act, which is there. So here a declaration is basically required to be taken by the stockbroker. When in case if the client happens to have a foreign account, then he should give the information. And if he does not have a foreign account, then he's required to give a declaration saying that I don't hold any foreign account. So that is also required to be taken at the time of registration of the client. So these all formalities have to be done when I register the client. And the UCC information, whichever I take, has to be uploaded on the exchange platform. And any client can trade only after the UCC information has been uploaded on the client on the exchange. In case if any client has traded without his information getting uploaded on the UCC, then the exchanges give a reminder to the broker to upload that information by the end of the day. But in case if the broker has not done it or forgets to look at that particular non-uploading of the UCC, then there's a penalty of 10,000 rupees per day per client. So that's where it is important that the operations of a stockbroker office are running properly, because any non-compliance could lead to penalties somewhere or the other. Second comes to the part of order management and collection of margin. Collection of margin has become a requirement. Initially, it was required only in the derivatives of the FNO segment. However, currently it has been applicable for the cash market also. There was initially that from 1st April 20 onwards, if any transactions have been happening in the cash market without the margin, then there was supposed to be penalty. However, currently because of COVID, that particular penalty requirement has been currently postponed. So it's very important that a broker allows any client to trade only after he has been given sufficient margin. These margins, what are collected, they are also called as initial margin, indicates that the margin is paid by the client before he does the any transaction. Then there's something called as an exposure margin. Exposure margin is basically calculated every end of the day on the positions whatever the client might have open in the FNO segment over. Even there's something called as a mark to market loss, MTM losses. So there are multiple types of margin which get applicable, which are basically required to be there with the stockbroker. And for this, the broker are required to give a information to the exchange on the margin held by them from the clients. So for that again, the exchanges give a time limit of 5 days for uploading the margin which they were holding for every client. So that is also being given because the brokers are allowed to collect margin in the form of like a check. So if I collect a check on Monday, I will be able to bank it suppose on Monday itself or on Tuesday, and I will get the credit to my account say by Thursday. In case if the check gets returned, I come to know that only on Thursday. So for that purpose, as exchanges want that any client should trade only after paying sufficient margin, the exchanges give a time limit of 5 days for uploading the margin file. And here again the concern is that if the margin file is not uploaded, then you are penalized 100% of the margin on the assumption that you did not collect any margin. So what brokers basically do is they'll normally try to upload a margin file either on the same end of the day or next or the 1 or 2 days time. And in case if they have any revision in the file take place, then they'll re-upload that margin file. So that's how the margin which is required to be collected is informed to the exchange. And in case wherever there is a shortfall of margin, then the exchanges charge penalty on that. So it's pretty fast. Like, you don't have margin, then you are penalized over, and the stockbroker further can collect this particular penalty from the clients also. It also further requires, like in the case of order management, it is required that every client should have paid the money. Yeah. Any questions? Any questions, please? Okay, I'll go ahead. Further, the exchange says that.
Give this kind of stuff.
Hello.
Yes, sir, tell you.
Can I go ahead? Okay.
Yeah, go.
Further is the exchanges says. Yeah. Further, the exchanges have specified that in case if any client has not paid the money within 7 days to the stockbroker, then he should not be allowed any further exposure. So that's what has to be taken care. This all gets taken care with the help of the proper risk management system or the middleware of system which the stockbrokers normally use in their office. I go to the third point called as client code modifications. So technically client code modifications are not allowed. However, in case if there's been some genuine error which has happened where I was supposed required to put the transaction in A123, but by mistake I put it in A124, or say M124. So in that code, if I am allowed to change the transaction on the exchange platform, if that gets done by the 4 p.m. max, and at that time, for any code change, there's a penalty which gets charged to the stockbroker, and which broker in turn normally collects it from the client. I am not allowed to do any code modifications in my back office. And in case if it is known that has happened in the course of inspection, then that is taken very seriously. There is also an option where at times the error trades happen, where suppose the client would have said broker to sell the stock, but by mistake doesn't bought. So in that case, those genuine trades are to be taken to the error code, and normally the stockbroker would close that error code transaction at the earliest. Reason being, if any trade comes to the error code and is not settled within a timeline, the penalty as well as the payment and the loss becomes that of the stockbroker. So normally the error codes accounts, the trades are gets closed at the earliest. I come to the fourth point, which says that the stockbroker should maintain segregation of the client funds and securities. It basically means that the broker should maintain the client's funds as well as security in a separate account, and the personal portfolio of the stockbroker or the stockbroking company should be in a different account. So that's what has to be taken care. And now, as per the new strict provisions, earlier people used to pledge the client shares and raise funds, but that has been currently denied now. So that's not allowed. Fifth, for the trades which have happened over, a stockbroker is required to send the contract notes as well as the daily margin statement. The daily margin statement is required to be given by the end of the day, and the contract notes have to be done within 24 hours of the trade. So, in some of the broker cases, there have been concerns where they don't get the files from the exchange on time, because of which the daily margin statement also gets sent on the next day, which technically is wrong. So that is what has to be taken care by the stockbroker while reporting it to the exchange. And talking about the next point, we talks about terminals. So the people who are sitting on the terminal have to be authorized people only, and they got to be having the necessary qualification. There's something called as an ISM certificate, which is required to be there for all the people who are sitting for an on the FNO terminal. However, for the cash, the exchange specifies that there has to be one cash certificate between 100 people or per location. So if there are 3 people sitting handling the cash bucket at one office, then I can have only one certificate. But if I'm having one person sitting in 3 different places, then I require 3 different certificates of the cash market also. So further, wherever the terminals are located, the whole information has to be given by to the exchange. Whether the terminal uses a front end or whether the terminal uses not a front end software but directly the need or the bold software, still that information has to be given to the exchange. Particularly that is with the objective of controlling the dabba trading. So dabba trading has been very prevalent in the interiors. So to control that, the particular provisions have been brought. Now I come down to something called like quarterly statements. By what time I will try to have it till 12:15 and more time. Okay. Now talking about the other things, we even have something called the quarterly settlement of clients account which have to be done by the stockbroker in case he is having a running account authority from the clients. So there are basically two types of client accounts which are maintained. Either there could be something called as a running account where the stockbroker doesn't pay the client for every day's transaction, neither receives it. That has to be taken care. So the quarterly settlements of clients account, the funds and securities have to be done on the same day itself. Then we come down, there's sending of something called the retention report. A retention report is technically a statement which is given by the stockbroker to the client, updating him that the shares what I'm holding for you, whether anything is excess over or it is sufficient considering the trades of the client. That's called the retention report, just within 5 days. And every stockbroker is required to send a statement of funds and securities within 30 days. And for that, what is important is the proof of dispatch is important. There could be a long report. Then we have the next one called as compliance with the PMLA regulations. So PMLA regulations are very important. That's PMLA stands for Prevention of Anti-Money Laundering. So in case of PMLA, the brokers have to see that the proper client due diligence is being done. The beneficial ownership of every customer is being taken. Client categorization has been done. Then there's something called as CAC, that's called as clients of special category. So if I am having any kind of clients of special category, then the broker is required to have more stronger control on him. Then we have something called as PEP, that is politically exposed party. For that, you have to take care. Then we have monitoring of transactions which has to be done. Then there are periodical financial updations. And then due diligence of high risk clients has to be done. So there are various points which are there under the PMLA. Actually, PMLA itself is one topic which can go in for 2-3 hours. So I'm just skipping it. Then we have something called the suspicious transaction reporting or cash transaction reporting just done to the FIU. Then as per the exchange requirement, every stockbroker is required to appoint a compliance officer, a principal officer, a designated director, and all which are relevant to FIU have to be informed to the Delhi office and has to be written in the PMLA policy also. Then there are various committees also which are required to be formed, like under the cyber requirement now, cyber requirement, you have to have something called as the information technology company. So that way, a stockbroker is required to see that his office is taking care of all the compliance requirements. Then every stockbroker is not allowed to charge anything excess from the clients. If any amount which is required to be taken by the stockbroker, then it has to be only the form of brokerage. He can't have a situation where he charges extra charges or transaction charges more. If the exchange is leaving you 2 rupees of transaction charges, the broker cannot leave it 2.5 rupees to the client. So that has to be taken care in the course of audit. In case if any advertisement is issued, then you are required to have a prior approval from the exchange. And now there is also something called there's a quarterly reporting to be done for any artificial intelligence or any machine learning which is being used by the stockbroker. So he has to give a declaration or give the details of what software is he using or whether he is not having any AI or ML applicable in his office. Further, they are also required to report on the cyber threats. So if any stockbroker has had any cyber threat, then he got to inform the exchange. Further, there is display of the SEBI registration, maintenance of books, I'll just skip this particular slide, and it talks more about the policies and procedures that will be there in the broker's office. And then in coming on to the periodical compliance place, you have something called as a CFM. That is like, there has been some enhanced supervision requirement which a stockbroker is required to report to the exchange on a regular basis. And on a weekly basis, they are required to give a client's funds monitoring report. It basically gives the report of the balance which is lying with the what say broker under multiple accounts, and the liability what is required to be paid by the stockbroker to his various clients. So that's called a CFM. It basically has to be given by the third working day the next week. So that's how it gets reported. And then we have something called the monthly CFS. That's a client funds and securities report which has to be given. If I say like every person, every client now who's trading with a stockbroker would normally get one SMS from the exchange or a email where they would have specified that this is the particular funds or securities lying of yours with the broker. It is basically started with the intent that a lot of times clients think that my money is lying safe with the stockbroker, but actually you might find that this money has been utilized by some unscrupulous people, where they normally do is that they try to do certain transactions in the what's a client's account, and if they have a loss, then they try to adjust the money which is lying with the stockbroker. So that's why this particular intent of sending a message or the email to the exchanges to the clients has been started by text. Now I come on to the systems audit part. So the systems audit has to be conducted, and I've written the various areas which are required to be audited. Technically, I feel that with the technological world coming up, with the COVID thing happening, with people trying to do their things from their home, the scope for IS audit, information security audit, would actually jump over, and it's a good area which every chartered accountant professional can look at. So talking about the systems audit, this is a regular routine audit which has been there in existence. And if you see the first point, I've written it is applicable to people who are using something called as CPCL, that's called as computer to computer link, or an IML, which is called as intermediate messaging layer in case of BSC. Then you have IBT, which is internet based trading, or if you are using algo, yeah, or if you are using mobile trading, HTTP stands for securities trading through wireless technology. Or is there something called as SOR? SOR basically means as smart order routing. That's particularly software which are made where the order will go to the exchange wherever there's a good what's the best price available. And at the time of execution, suppose I wanted to sell 1,000 shares, but suppose BSC I've been able to sell 500 shares, and now the available price for selling the shares is less, and in the NSE if it is high, automatically that order will get routed from BSC to NSE directly. So that gets done through the SOR software which is being used by the broker. Then you have something called as DMA, which is basically direct market access, which is there for institutional clients. Further, we have to report on the risk management capability of the front end software which is being used, where the admin terminal is the main terminal, where all the controls are set by the broker for controlling his front end activities. Then talking about security, password, access control, session security, database security, this all has to be checked by us. So these are multiple points which have to be checked by a systems auditor. Again, specifying the exchange has specified a format of the systems audit, and which has to be used. Nowadays, NSE BSE have started accepting these internal reports and system audit report, which have to be uploaded into their system directly. So earlier we used to take the printouts of this system audit reports, sign them, scan them, and then we used to send over. However, now everything has got electronic, where you are required to fill the report on the exchange platform and then digitally sign those particular reports. Again, as I said, cyber audit. So the cyber audit scope, it talks more about the governance. It talks about more about the identification. So whether the stockbroker has identified its critical assets, whether those assets have been properly earmarked, whether they are operational or not, and then we have to carry out something called a gap analysis. In the sense, what is the best, benchmarking of the cyber system should be there, and what is present in the stockbroker's office. And on the basis of the gap analysis report, the brokers can take further action of implementing whatever cyber threats they feel would be applicable, or the risk what they are having over, and on the basis of that, the identification and action takes place. Here, talking about the protection, you look at the access control, physical security, network, data, patch management. Then again, VAPT report becomes applicable. VAPT technically stands for vulnerability assessment and penetration testing. Uh, as per majorly what we have found is people have been using carrying out testing of the vulnerability assessment, but talking about the penetration testing, that is not being done majorly, because penetration testing requires a full risk on your system. So on the live system, which the stockbrokers are normally not comfortable. So they normally carry out a VA report. The PT is kept pending. Uh, Further, on the cyber audit, we got to look at the monitoring and detection side. Even look at the response and recovery. In the sense, if any incident happens, how fast the recovery is happening has to be checked and reported over. Further, there are trainings and education which is also to be done. By the stockbroker to their clients. I come on depository. I've just made it very small. It is again including the client registration. We have dematerialization basically, which when the securities get converted from a physical form to the electronic form, it's called as dematerialization. And there's something called as rematerialization when the securities held in electronic form are converted into physical lines called as rematerialization. Then we have DIS. Basically, that's called as delivery instructions which are given over. So in that, particularly, the more focus has to be on the DIS, and there's something called as the off market and on market. On market DIS will basically mean where the securities are being sold by the client on the exchange platform, whereas off market would mean where the shares are being transferred from one beneficiary account to another beneficiary account, and which is not going to the exchange or any stockbrokers account. So those things have to be taken care. And one of the very when I'm registering a client, I have to send something called a welcome kit. And in the welcome kit, I have to even give the delivery instructions. So there are a lot of times when the returns come over to the group, to the deposited participant. So that is something which is very concerning. That if any person has just opened an account and I have sent him the DIS slip and it has returned back, so whether the client really stays at that place or not. So that's has to be taken care. Then there could be various aspects like freezing, pledge, dispatch of transaction statement. I'm skipping this. I'll go to the next part. Then talking about the research audit areas. Research audit is also something which is very highly required over, particularly stockbrokers who have also taken registration as a research analyst under research and regulations. Then they are required to have an annual audit to be conducted by them. The basic reason for having this annual audit is the objective that the activity which is happening in the research entity is being properly carried out. The reason for coming up with these regulations have been that SEBI was always of the view or feel that the research people they are normally trying to play with the investors. Where suppose if I am a holder of some security and I want to sell them, then I try to come up with the research report which will be very optimistic for that company. And by looking at that report, people get carried away, and by that they would start investing over when actually I'll be selling. So to avoid all these cases, the research regulations have come in place. Again, the research regulations, you require registration and that any person who is a research analyst and is appearing on the what say media or is appearing in public has to follow certain guidelines or has to give certain disclosures. So whether those are being done or not, so that has to be taken care. Again, talking about research, the research reports have to be given to all the clients at the same time. A research analyst cannot work in a manner where he makes a report, gives to his HNIs first day, and will give to his retail clients on second or third day over. So that's not right. Because exchange, the regulators SEBI says that you have to treat all clients at equivalent. You cannot give a favorable preference to your HNI client or to a institution and not to the retail. And very important aspect which has to be checked by on the research is the whether there is conflict of interest which is there, and whether there are any personal trading which is happening over. A lot of time it comes to a light that at any stockbroker office, the research analyst would have bought or sold the shares between the gray period, something called a gray list, indicating the list of securities on which the report is being currently made. And there's something called as a period when they should have not traded over. However, some analysts by mistake normally would have even traded in that stock, where suppose he's coming with a buy recommendation on the stock, and he would have without knowing that that particular report is being made, he might have bought the shares a few days or few weeks back. So that becomes concerning. Similarly, comes at the time when there could be an intentional play also. So that's what has to be taken care. So research audit requires you to be very careful and see that the systems are working proper. Like you have to be a lot of things like we depend on the people. So we have to be very consciously trying to appoint people as a research analyst to understand that they don't do anything which is going to be against the law. Again, they have some NISM qualifications and there are various points over. I will like to skip them over so we can have more of questions to take place. Again, talking about investment advisor regulations. So investment advisor, there are again 5-year registration. There's a qualification required that he could be a professional or he could be a person with earlier even a person with experience was considered to be acceptable to be an investment advisor. However, as per the would say new under the PM, so that's under the PMS. You can't have a portfolio manager who is not having a qualification. Sorry, not for the investment advisor. I have specified the point, and very important, like is the SEBI had in their board meeting on 17 Feb come up with certain what's in the points where they have said that any investment advisor cannot be a distributor of a product. Like normally, what happens is, suppose I am a client and I do take advice from my investment advisor, then the concept of taking any fee payment to the investment advisor is not there in India. Normally, what people do is people would buy the product from that particular advisor only, and that advisor would earn his commission by selling that product. So that used to be the normal model. However, SEBI in their meeting had discussed saying that there has to be a segregation of the advisory and the distribution activity. So as they say that they are into conflict of interest, so they have to be working separately. Further, currently the investment advisor may not get an agreement, but the proposal should be an agreement between the investment advisor and his client, where he should specify the agreement specifying the responsibilities. Currently, investment advisors are charging as a percentage or any amount. Here, SEBI has come saying that there has to be a clarity on the fee, and there have to be only a specific amount. Like there's a upper limit. Lastly, persons who are dealing as distributor should not nominate nomenclature investment financial advisor or a wealth. That's what it has to be. From the audit perspective, in the risk audit area, also there's an annual audit which is required to be done. Even the investment advisor regulations, that is the requirement of an annual audit. So many of the people are not really aware of that, or they will just missing on this, but that gives an opportunity for professionals to look at this area of activity. Talking about the portfolio manager, there have been new regulations which have been effective from 16 January 2020, where the fees and everything is there, but then the net worth requirement has gone to 5 crores now. And further, they have specified that the minimum portfolio value has to be 50 lakhs. So those two are the major changes which are getting applicable as per the new current regulations. And additionally, the requirement of disclosure document, which is basically a document which the portfolio manager gives priorly to the client, where he tries to specify the various details about his company or various portfolios or various schemes what is running over. So that is still there. Now the additional requirement of an investment approach has come in, which has to be specified in the disclosure document as well as in the agreement also. And there has been some format change in the agreement also. So effectively, every PMS holder will have to be taking care that the changes have been implemented. Here again, we are talking about the audit area. The chartered accountants in the earlier audits, what I specified for research as well as for investment advisor, chartered accountant as well as the company secretary was allowed. However, under the portfolio manager regulation, it's only a chartered accountant who's allowed to carry out an audit, and he's required to give a certificate out of his audit what gets made. The portfolio manager is required to give this report to all his clients, which normally would specify that whether the operations of the manager are being done properly or not. Second thing is a chartered accountant is also required to give a portfolio report also, where he certifies the balance sheet, the capital gain statement, the profit and loss, and everything of individual client, and those are given to the client as a certifying that the assets what are specified are in existence, they are lying in the demand account, and everything is being properly maintained. So there are two different certifications which leave as an opportunity for professionals in that area. Now talking about the challenges over, the challenges for the capital market is that you have a lot of regulatory changes. So any professional who is looking at this area has to keep himself abreast with what is changing over. Why? Because as an auditor, you can't take a risk of certifying something which was existing earlier, but you have to be knowing what is the latest position happening. So that's what has to be taken care. Then there is a strict implementation of any point which is there. Like when SEBI comes up with any implementation activity, it tries to further pass on the responsibility of its implementation to the exchanges to see, and exchanges further will downline that responsibility on the stockbrokers. So what happens is, as a stockbroker, as a final person, I am responsible to implement. So that again gives an opportunity for professionals, as I said earlier also, that we can work hand in hand with the stockbrokers to help them in implementing these regulatory changes. Further, the exchanges are all pro investors. They all support the investors. They always feel that the stock exchanges, the brokers are at fault all the time. So that's where, as a stockbroker, you have to be very conscious and very careful. For SEBI, debarring you is just a normal activity, but as a broker, for you, your whole business gets affected. So that's where it's very concerning that you run your operations in a very proper and timely manner. Further, brokers are finding the cost of compliance to be higher than the revenue what they are earning, and with the technological changes also what are happening, they have to really spend money to keep themselves abreast. Then that's why I say that there's again an imbalance in the risk and the return. The business has become very risky. Now we even have a lot of budget brokers being there, or there are brokers who are using technology. And if that technology misfires sometime, then you are at big losses. Like we had an example where Chiroda system was not available, and a lot of people had to lose money because their open positions could not be cut over. So that becomes concern. Penalties are very high in the exchanges. So the lapses, like if any simple lapse happens over 10-20,000 is something very normal. But for a stockbroker, at times it could be very costly affair. Then okay, now coming on to the auditors over, we auditors also have to be very, very careful. Right? Because in the sampling which has been specified by the exchanges, they have specified a clear methodology of how the sample have to be selected. And further, right now, like it's even happened that the exchanges have asked for the samples from the auditors, right? Because as per the SEBI regulations, they have been authorized to review the capability of the chartered accountant also. So in that case, as an auditor, you have to be very careful that suppose when a regulator calls you up, then you have to be confidently standing on the basis of the audit which has been carried out by you. Further, like there are a lot of prior approvals. So that's all, friends. I have tried to share my part of the knowledge on the capital market audits. There's a lot of opportunity. However, it all depends. Like every thing comes with a lot of responsibility and work. Thanks. Back to you.
Wonderful. Can we have Ajay and Archana also join us? We can take an interactive session. There are lots of issues for Mitesh also and Sandeep also. Ajay, Parmar, Archana Moge, please join us and put your
Can you hear
video on also. Please put your video on. Even others, we have received lots of questions. Ajay, Parmar, are you in?
Can you hear me?
Video on. Archana Moge, Anupam Petkar. Yeah, hi. Wonderful presentations. Now we have very little time for interaction sessions, but first I'll get to Sandeep. Can you share your thoughts on the Karvi case? Very briefly, in less than a minute, Karvi case, and also on the recent crisis in commodities, particularly oil, fall in the price of oil. What are your thoughts on both these issues?
No, like talking about on the part of the Karvi case, Karvi was basically the NBFC issue where they are trying to raise a lot of funds, pledging the client securities. And considering that they have the exchanges have come with further regulations trying to restrict all these things happening. So I'll say what has happened at Karvi is something which is not right. And how do you control it is again the big issue. So for that purpose, the exchange have been coming up with more and more stricter regulations. Talking about the oil, actually it's something which is very uncomfortable. People have lost heavily on the oil part because nobody had thought that there could be a negative rate coming for any transaction. So that's all. That's all what I can share about.
Thank you, Sandeep. Mitesh, can you share your thoughts on IBC? We have about 2,000 cases. Hello?
Yeah, listening.
Mitesh, are you in? Yeah, out of 2,000 and over cases, how many you feel are due to asset liability and cash flow mismatch, and how many are due to actual fraud by promoters?
Good question.
Truly speaking, I don't have correct statistics, but maybe you can say the 50-50. Because if I say even in asset liability mismatch, if I take out bucket wise, say for example, the big ticket size ones in the steel sector, we were falling behind because of the prudence with the government policies. They were very slow in terms of whatever we need to do. Right things with the vis-a-vis the competition with China. Even today we are going slow. We are not able to grab the company's investments from China. It is coming less. If I say power sector, Again, government has initially merchant policy wherein all the small players were invited, and then that merchant policy was withdrawn. FSA was a challenge. So FSA was not having being made by the power companies, because of which even they were not able to do in some extent PPA also. So power companies went into a doldrum, and they felt over a period of time that since if I am a promoter and government has invited me, if government is not supporting, they are having such drastic policy changes, why I should suffer? Let me take out my money which I have invested first. And that is how the things have started. And what has happened, the officer who sits over there, he also kept on supporting. So the CDR came in, CDR failed again because of the structural issues, and then money kept on getting in and in through various forms of restructuring. And when there was a brake applied, the balloon had pumped up a lot of air inside and it got burst. So steel sector I said, power sector I said, third sector is a, I'll say, trading sector where good amount of exposures are there. Every bank, I will say, there will be minimum 300 400 accounts who are having a exposure above 100 cr, and they are into a trading sector, be it a metal trading, agro produced. These all largely are the ones where such high exposures are not required, neither they have that bandwidth. So even if they go in a IBC, there will be no buyer because there are no underlying securities in that, and that is why those accounts are going into the liquidations. These are fourth category I will put is the EPC companies. In EPC, again the same thing. The first company in the EPC was Jyoti Structures. So huge amount of claims are there in that. There are no underlying securities. So EPC for the Jyoti, they have some good 45% the buyer is willing to offer. But otherwise, if you see in general, EPC companies are also not getting a good value. Against 100 rupees exposure, they are getting a value of merely 7 rupees, 8 rupees. So it's not a haircut, it's a head cut.
Thanks, Mintesh.
Yeah.
Ajay, you have over 25 years experience in markets, stock markets, investment banking. What is your advice to investors? What he should do this year, particularly what has happened now in this lockdown?
See, I think I am a little confused on whether to invest or not to invest. So I'll give my arguments on both the sides. Then you can take your own call. You know, it's up to an individual's risk appetite. So on a positive side, I would say any company, should be valued on its intrinsic value. So the intrinsic value is like a magnet. Can you hear me?
Yes,
Hello?
very clearly.
Yeah.
Very clearly.
So an intrinsic value is a magnet. So price has to move in that direction. But today, if you see, even if I cut down the intrinsic value of FY21 numbers, I still feel that the current market price is much, much lower of any of the stocks, any of the good stocks, any of the even mediocre stocks. So from that angle, yes, I think this is a good time while your risk is low. Always understand that the risk is always low when you are buying something at a lower price. So a 100 rupees stock is at 60 rupees. I think you have a good, investment opportunity because the risk is low. But on the other side, there is a lot of uncertainty and fear. And these are not fear out of, these are not fear out of thoughts. So these fears are, I would say, very unpredictable. So according to me, we are just gauging where the COVID situation is. So today I had always given an example of a hurricane. So when the hurricane comes, everybody, tries to hide under, their house or even under the dining table. So today, right now, we are hiding from the virus in our house. And once the hurricane gets over, we come out and we see what is the destruction all around. So I think once we will come out, then only we will come to know what is the economic destruction and what is the financial destruction, how the life will change and all. So in that scenario, I would say if you want to be an investor, just be either a 1 or 2 days or 3 days of, small short term investor, or you be a 3 to 5 year investor. In between, if you want to be, I think you should not be. On a portfolio level, I think you should be at least sitting on your 6 months requirement on cash. When I'm saying cash, I mean in bank account and FDs. With that, I think then you can, in the balance, you can roam around. I think you can do a lot of buying. So I would say buy banks like HDFC Bank or Kotak, or buy companies like TCS, or buy companies like Sri Cement or Ultratech. Basically, my theory is that when the markets are bad, chase companies which are having lower beta and which are of better quality, or say industry leaders. So if the companies are having lower beta, if the stock will fall, markets will fall, this will fall little less. So you are insulated. Or at the same time, if the market will go up, they will not run up, but that's all right. So you have to preserve your capital. I think preservation of capital is very important in this scenario, and wait till things get normalized, and don't go by what the government says. I would say whatever the government is saying, I think they're just giving you another excuse for 10 days, 15 days and all. Because after going out, after the work will start, I don't know how I'm going to react. Because I just was speaking to somebody in Delhi. So one good big NBFC, and they had started by this Tuesday. And the guy worked for 4 hours, and they found that just 2 days back that parent has also started, and the CFO got the virus, so the entire office is closed. So it's very difficult. So you will have a wave of open your office, and then maybe for some time you have to close. A lot of security issues will be there. So in the middle of it, I think an equity investor will be always confused unless you are working on a intraday or 2-3 days. I would say stay calm and be patient. So this is a buyer's market. If you are getting a stock at 100 rupees, wait for it to come to 80. Have some patience, it will come to 80. That is for sure. Any stock, I mean, across the board, any stock.
Thank you, Ajay. The message is be calm and stay patient. The time is getting over, because anytime the 2 hours booking would get over. Archana, are you in?
Yeah,
Archana?
but Manoj, one question to Ajay. Now, in scenario, shall we buy or sell?
Which one?
And the market to go down.
No, I didn't get it. Hello?
See, now as you say that whether to buy or not is a dilemma. Similarly, to hold on to shares or sell now and wait for the market to go down and then buy again.
I think at this level, again, you want to trade, you can sell and you can buy. Yeah, that could be a good decision, provided you don't have. I mean, I would say if you are willing to buy at a lower level, maybe that could be a good strategy. But do it in a very very small amount of a portfolio, so that you can experience. This is like experience individually. Will have a different experience, because you have what price you bought something. Suppose you bought something at 100 and now you are selling at 40, and then expect it to come down to 30 and buy it. It's all right, but the 60 rupees loss will be, you have to account, since we are all chartered accountants, that accounting and all treatment also we have to see. So I believe in this market, hold on is a better strategy, but you can trade by selling first and then buying. That could not be I would not rule out.
We'll have separate sessions on this, in detailed sessions. We have good news from Nasdaq. Nasdaq has recovered all the losses of 2020. Reliance is also going up every day. Yeah. It shows there's lots of money to be made in markets for those who look at markets deeply. With this, I think we can close the sessions for today. We had 2 hours of intensive, in-depth knowledge sharing by both Mitesh and Sandeep, and Ajay too. We had a little bit of interaction. I hope we'll have many more interaction sessions. So Saturdays, I would request all the members to watch out. So digital interactive sessions are happening. Many more to come. And watch out and be ready, and keep watching. So with this, I would close and thank all the participants and look forward to meeting and interacting with all of you in the future think tank sessions.
Sure.
So
Thanks a
Mitesh,
lot.
I think you are the host.
Thank you.
You see how much remaining time is there and you can share your concluding remarks.
No, fine. So we had a good session, though I have kept the time till 1, but it was giving me 40 minutes and with 2 extensions. So I was feeling maybe we cannot extend beyond 2 hours. But as we speak, still it's going on. So maybe till 1 p.m. it can have. We have another 30 minutes.
Oh, wonderful. Archana Moge, are you in?
I don't see her.
I don't think.
Hello, Aditya Agarwal. Hello.
Aditya is also not there.
Okay. Anybody else would like to have any specific questions? We can cover it on anything. We can have it on banking. We can have it on capital markets. We can have on various sectors. First, let us, Dushan, let us see if any other participants have any questions. We have lots of issues we can cover, but we had a time limit. Anybody else, please, welcome to join in and ask any issue. You can unmute yourself, put on your video, and please ask any question or share your thoughts.
People are silent.
That's okay. They had a wonderful session and nobody expected we'll continue for 2 hours at length. Now, yeah, Dushan, you had something to say.
Yeah. Now the thing is, you mentioned about the Nestec and all, but see the Reliance development. I think we need to study because now he's separately making a subsidiary company for refinery to chemical. So basically, IL will become a holding company. So what happens to the Reliance share? Is it going to reward the investors in all these 3 subsidiary companies when they become public listed companies? So I think this point we made in the next meeting or so. Because Reliance is a real now, this point of study.
You are right. But what Reliance is doing now, looking at the way Nasdaq is rewarding the technology companies, Reliance seems to be positioning itself as a technology company and trying to get maximum valuations for its technology platforms and getting international partners, technology companies who have got huge cash on their balance sheets. They are picking up small stakes in subsidiaries of Reliance and trying to use this opportunity to invest in the India growth story.
So they are investing in Geo or they are investing in RIL because the thing is, if the Geo is also a separate company, so if they are investing in separate company, then the money may flow to Reliance, but ultimately they are becoming shareholders of Reliance Geo.
They are investing directly in Reliance Geo because Reliance Geo has a very attractive balance sheet as of now with very low debt and high market cap valuations, and where the future seems to be very attractive because of lockdown. There is more of digital use and work from home. The company may benefit. So it has crafted a very great strategy with the collapse in oil prices. So till the money from Aramco comes in, their due diligence is on. They have got fantastic valuations with the help, of course, of the current government, which is very supportive, particularly to the Reliance Industries management. And if money is coming in from Facebook and global FI investors, why not? Money is welcome in India, and it's coming in as Nifty company. So Nifty is also going up. So India is not doing that badly at the index level also. Of course, as you said, we'll have to go into more details as more and more money comes in, and also watch out for money coming in later, if at all, in the refinery to chemical business, which is yet to be farmed out as a separate subsidiary. But the due diligence is on. Hopefully, a smart management and the right time for India to get international investments. It should come, hopefully. Let's watch it. But so far, so good. It is at a 52-week high.
I
Yeah,
think
so
what I see about Geo is that
yeah,
over a period of time, they will come out with a public issue, but not in India. This will be one of the first issues which may go out to Nasdaq with the regulatory requirements, subject to all the requirements of the regulation, and they may make a very large issue, the benefit of which will ultimately come to Reliance shareholders also. So I think that is how it will. If you look at the history of Alibaba or Tencent or many Chinese companies have grown very fast. So all in the technology companies in China have grown very fast, and they have gone to IPO on Nasdaq. They never went to local Chinese markets. Similarly, I feel India, Reliance will do. So if you look at it, 10% owned by Facebook itself is a good sign that Americans are interested. And these companies will definitely, with a change in the stance for China, I think Nasdaq investors also will be very much interested in companies like this from India. So this is the first Indian company which will be of size of any Chinese tech company. That's what is my
so you mean
understanding.
to say Reliance shares has a potential to go up?
It will anyway. It has to go up. At the same time, as you said, the core business is suffering. So what he is doing is he's just keeping himself, out of the debt trap. He knows that maybe in the next 2 to 3 months there could be a chance of some sort of a downgrade from any rating agency on the company as well as maybe on the nation itself. And in that case, if he's got a lot of debt repayments, he will be in trouble. So now I think he's insulated himself for the short term. And at
Yeah.
the same time, the basic requirement now will be from the technology company only, Geo only. So Geo is self-funded. So it's a good thing.
Yeah, glad Archana you have joined in. We are looking forward
As
to
of
you.
now, Geo has any debt, or how is it? Or whatever the money is coming is getting repaid the debt of refinery?
Geo platforms has very low debt. In fact, the latest which is coming in enterprise value, a difference between the market cap and the enterprise value is very, very low. So debt equity ratio is less than 0.2 to 1. Now, Archana, you have joined and we were looking forward to your participation. Would like you to share your thoughts on two aspects. One is work from home in the banking sector. Next is the latest developments is developing a bad bank. IBS coming with a bad bank. What are your thoughts on that?
Yeah. So with regard to work from home, the work from home is the way to go. Hello, can you hear me?
Yes,
Yeah.
very much.
Right. Yeah,
Work
we
from
can
home
hear you
is the
very well.
way to go for the future. My personal opinion is work from home, the productivity is also higher because there are time savings on the commuting. And second thing is with regard to costs also, many companies are cutting down on the cost or renegotiating the lease agreements for the commercial premises. And it's been all there in the news also that many people are planning, many companies are planning to go for work from home even after the COVID-19 situation is over. So work from home is here to stay. With respect to the banks, then in Indian banks especially were reluctant to implement work from home situation even earlier when all the foreign banks etc were practicing work from home maybe once a week or twice a week. But now that it has been made mandatory, the experimentation phase is already done with, and they might go for more for this work from home in future.
Fine. Thanks, Archana.
With
Anupam?
regard to the second
Yes.
question,
Yeah, sure. Yeah. Let's have your thoughts on the bad bank proposal.
No, so what exactly is that proposal? I do not know, so I will not be able to answer that question.
Okay, Anupam?
He has
Anupam?
just got up.
Okay. Yeah, let it come. Dushanji, would like you to share your thoughts on the refinery sector, particularly with the collapse in oil prices. And some of the refineries have restarted being a continuous operation unit. And what type of possibility it can have? Would there be bumper profits?
No, profit and all. See, right now they all have to book inventories. Like even Reliance also booked about 4,500 inventory loss because their purchase of oil was contracted and all, and the price has suddenly fallen. Going forward now, what kind of demand in India will be depends upon the lockdown. Now, how long the lockdown will remain and all that. It looks like the lockdown is going to be, off and on, but for a prolonged period. I can share a couple of points on lockdown itself because I attended one webinar by Dr. Randeep Guleria, Director AIMS and Head of Clinical Research Group, National Task Force for COVID-19. What he said is that these lockdowns are basically for slowing down the spread. As in when the lockdown is lifted and all, the spread is going to be there. And we have to live with this background for at least say 1.5 to 2 years because there is no cure so far. And prevention has a limitation because the incubation period is about 8 to 10 days. So an infected person, say he meets around with the people till he's tested positive. So within that incubation period, he would have infected quite many people, and the circles they keep on increasing. So it is going to be a very tough time, even if the lockdown is lifted. So they are saying that the peak of the India number of patients in terms of patients will be somewhere in June end. And if you have seen last few days, from say 3rd June, we were 41,000. 3rd May, we were 41,000. Yesterday, we were around 60,000. In matter of 5 days, 20,000 added. And Maharashtra is now, suddenly it is about 13,000 and 19,000. So Maharashtra is a big chunk. Mumbai within that, more than 12,000. So far as we are concerned, I think we are in for a longer period of lockdown. And going back to the impact on the refineries, so the businesses are down, the logistics are all disrupted. The migrant workers and all, have very, very badly disturb the activities, the low-level activities, supporting activities. So how other businesses will start, how the gas demand will pick up, how the other industrial fuels demand will pick up. All these, I think, for 3 to 4 months are going to be on the very, very low key.
Okay, thank you, Dushan. Anupam, would like you have good insights into automobile industry. What is happening in automobile industry and what you feel is the way ahead now?
Right now, there are no changes in procurement schedules. As I spoke with my last company also, so we have not received any procurements orders. So it's difficult to predict exactly how it is going to move. But it's looking we are in the longs. It's going to be difficult, tough market again.
See, if you have seen the distribution of districts into red zone, green zone, and orange zone, the number of districts in green are higher, around 300 plus or whatever. But then economic activities wise and contribution to GDP wise, the red zones are contributing about more than 2/3. Yeah. And if zones are not having much economic activity, then the major part of India is open, doesn't make much economic sense.
No, but here I think I have some, my thoughts are that, in the red zones, suppose we have Reliance Industries, right? But Reliance Industries is actually working, factories are there somewhere else. So, work is happening since the registered office or corporate office at some other place, which is a red zone, numbers are not getting picked up properly. So according to me, anything, wherever there is a population, a city or a town with a population of maybe less than 5 lakhs, those guys are free. I think in those areas, things are anyway happening. I've seen so many factories where workers' colonies are there. So all those factories are working. So, actually speaking, manufacturing and agriculture, both should do well. Okay, say near Bombay, suppose maybe Vapi will have some problem. But I know distant areas, I think UP or maybe some other places, I think those numbers should be captured. So that GDP number is better. So I would say 50% may not be 50%, but at least it is 30-35%. And agri is almost free. So I think agri
No,
this
but when
time should lead.
I'll tell you, a couple of my friends, they are locked up in their farmhouses. They are gone in March 3rd week farmhouse,
Right.
and the lockdown was declared, so they are still in the farmhouse.
Yeah,
True,
that is there.
true.
So individual cases are
No,
there.
no, no.
No doubt.
So what I'm saying is, they are saying about the agricultural activity, the produce is there, but the logistics is not there. The
Right.
farmers are suffering because they are not able to reach the product to the markets. In fact, if
Right.
you see availability of vegetables around, then it is now quite impacted. So the point is that we have not yet reached the peak. And as per this doctor from AIMS, what he says, that India is expected to reach peak somewhere in last week of June, 3rd or 4th week of June, and by that time, lot of orange zones would have also become red zones.
Yeah.
And so what happens is that the refinery may be working. Say Reliance refinery may be working. I know that HPC, BPC refineries in Bombay, they are working at 40% capacity. But say Reliance refinery may be working, but subsequently dispatching of the product and reaching to the customer, that will be hurting a lot of industries.
So I have a question here.
Yeah. Archana, go ahead.
I have a question. Just to go back to 2014, I'm not giving it a political color, but I'm just saying that see, Modi ji emphasized on the Swachh Bharat Abhiyan, right? Putting forward Mahatma Gandhi's ideology of cleanliness, right? So in the same way, Mahatma Gandhi had another ideology pertaining to self-sufficiency, right? So in this case, considering that the Indian economy is mainly agricultural economy, right? So my question is, should there be any issue on the self-sufficiency portion of it, considering that we are primarily an agricultural economy, and if the logistics is managed, should that be an issue? And considering the agricultural output, what would be the impact on the GDP, considering that most of the people are in rural areas?
Well, the latest what is coming in from the International Rating Agency, the GDP is coming to, for 21 is coming to 0. And for 2021 and 21-22 is coming to about 6. But there is a view, if the lockdown continues, possibly GDP may come to -2 overall. But what happens, the lower the higher the impact for 2021, there'll be a bigger bounce back in 21-22, then they're talking about a GDP of 10. So this is how the market reacts. Market discounts the future. And today, lots of fund managers are saying the market should discount 22. So possibly there may be 6% growth, possibly 10% growth. There's a deeper impact on 2021. So there are huge opportunities. This is the way some people are looking at it. But GDP, of course, growth will depend on the containment zones and the red zone area and the lockdown impact. And the numbers are evolving. So let us just hope the agri production which you talked about, which is expected to be bumper, we hope that is not affected. Sandeep, Maheshwari, are you in? Can you put your video on? Mitesh also?
Yeah.
Sandeep?
So I have a client, for example, who are into cement sector, okay? Just because of the technical...
And also Sandeep, Maheshwari. There are some issues to be raised by him. Yeah, Mitesh, good you put your video on.
Yeah. So they are operating currently around 30-35% just because the kiln doesn't get a moisture. That is the intention. But gradually I see, since dispatches are not happening, the sites are off, the laborers have went back to the native, maybe on infra or on real estate front. So shortly they will be requiring the funds, and the banks are not willing to lend the funds, because even if they lend, they know that this recovery is going to be difficult and account may turn into an NPA. So we are entering gradually into a vicious circle where to come out of it will require a lot of boosting or comfort from the government. In fact,
It's a good
government.
point, Mitesh, you raised on banks are not willing to lend, NBFC is not willing to lend. But thanks what happened in US, just with the announcement, Boeing, instead of getting money from government, they got big money in billions of dollars from the markets itself. But somehow here it is unfortunate. Tata Motors could not raise money for his 1,000 crore NCT issue. It had to postpone. Even Bajaj Finance, a blue chip, just got 200 crores for their NCD thing.
Okay.
Sandeep,
Yes, sir.
Mitesh,
Yes, sir.
would have you back. Sandeep, let's talk about insider trading. That
Yes,
is one
sir.
major compliance area.
Very
Now,
true.
the brokers themselves, many of them, and also employees who have
Right.
access to information, it's said they are rampantly engaged in insider trading through other accounts,
Right.
friends' accounts or family accounts. What is
Very
your
true.
take on that as a professional? How do you advise that? And that doesn't happen, and there are proper disclosures.
Okay.
And after
Now,
you address this issue, I would like Ajay to also share his views on insider trading,
yeah.
practical aspects.
Yeah, okay. So talking about the insider trading aspect, insider trading as a regulation is very vast, very difficult. Like, it has given tremendous powers to the regulators. It is like, they can say anyone and every person to be an insider. Now, whether you are an insider or not is something which you have to prove over, which is which is like, it's really very difficult to do. Now, the point talking about who is an insider is all who is having some information which is not known to all the public over. So here there is always concern. It always depends on the organization. Now there are organizations who ask for the information about like they could take a clear declaration from the employee saying that I will not engage in any insider trading through myself, through my family members, through my friends, and through anybody else. Now, when he has given such a clear declaration, and then still he does it over, then there's no catch what you can take. It is basically if you are found that yes, you have done something, then it becomes concerning. And as an organization, if you come to realize that somebody has done something wrong, at the same time, if you take an action of removing from the organization, then you leave a scenario where people become cautious and concerned that the organization is very much high on the regulatory part. So that's how the things work out. As such, it's very difficult to handle anyone. That's true.
Ajay, Parmar, your thoughts
Yeah,
on
I
insider
think on
trading,
the
practical aspects?
insider trading, I have seen the guidelines are there, but people are not following, and even the regulator is not yet going stringent on it. Like on one of
Yeah.
the insider trading says that if promoter wants to sell stocks, then he has to give his selling plan 6 months before,
Yes.
which is actually there. Okay, but I don't know how practical it is, but the fact is it is there. So so we can always the day they decide to do it, I think implementation will happen. You will see how many people will get back to their books. So I think we have the things on the textbooks. I think it's just an implementation, but there are, I think,
Theoretical.
regulator is worried on so many other things. So I think slowly we are getting into it. So I think we are following all the regulations which American exchange must be doing, but we are not implementing it. So laws are already there. It is just that when they will start working on it.
Fine,
Actually,
Mitesh.
Yeah.
in hindsight, yeah.
Yeah, Archana, please.
Like compared to the US SEC, the investigation with regard to Indian companies or with regard to SEBI is not that stringent, and the implementation of the insider trading regulations are also not that stringent
Right.
compared to US SEC.
Very true.
I'm doubtful even whether they have the all the relevant tools now with the onset of all these work from home and other scenarios. wherein it is not difficult to share insider information, and it is a vulnerable area actually. But historically, what I have seen is that the insider trading and other investigations, it starts only once there is a data leak. So there is no suspected insider trading investigations going on. Uh, Probably only if there is a whistleblower complaint or something, given that it has now been made mandatory to be reported in the CARO, maybe that can trigger certain insider trading investigations.
Yeah, Archana, I'm glad you raised these points about SEC. What happens in India so far is there have been some investigations, but it ends up into settlements and companies pay penalties and compound and pay. In fact, there is one top company, Nifty, which offered huge amount and 50 crores also as a settlement. And we don't have a case as happened about Rajat Gupta practically. So that is these
Yeah.
cases, SEC actions prevents insider trading, which of course is always the lure of money is there. I would now, Mitesh, would like to address the issue from internal audit point of view. How do you see insider trading and violations and and also to prevent recurrence from an internal audit perspective?
So I just take the point which Archana raised and taking your question ahead. So if you compare in SEC, the norms are that the audit committee, only the internal auditors or statutory auditors and the independent directors are sitting. There is a video recording which is happening and is being submitted to SEC. But in India, we know how much the weightage is there by the executive management on whether on the internal auditors or statutory auditors or on independent directors, and how much role they play, and the questions which comes on the regular basis from the internal independent directors. The norms are being defined, secretarial standards are there, where 7 days ahead of the board meeting, the deck has to reach to the independent directors, where they have to go through each and everything, whatever the agenda is there, maybe on the CSR front, on the remuneration front, on the internal audit front, on the accounts front. But there is a huge non-compliance which I have observed over there. And this is largely true. Neither independent directors are aware about this provision, and management though is aware but keeps silently violating this, and no one is raising a bar on that. Because of all these things, it doesn't come and crop up in a right manner.
Thanks, Mitesh. Now we'll come to the most crucial aspect, Franklin Templeton issue also in detail. Sandeep and Mitesh, just share your thoughts in a few seconds on Franklin Templeton issue, and then Mitesh, you close the meeting for the day.
Yeah, with the reference to Franklin, not good. Every company or mutual fund, I'll have to really assess that, what sort of investments or what sort of papers are they really buying over, and what the risk being taken across. Even for investors, it has become a concern. Now it feels like it's better to get a FD interest rather than trying to look on the mutual fund risk returns.
Thank you everyone for giving me this opportunity, and especially Manoj as well for continuously chasing everyone to keep their on toes, whether to act as a speaker or to come as a participant. And even if you come as a participant, he ensures that you speak up, you have some questions.
Right. Yeah, I agree.
Yeah.
Really appreciate the efforts put in by Mitesh, Sandeep, and Manojji. And he keeps everyone on the toes. Yes, that's rightly said.
So stay safe, everyone.
Yeah. Great.
Yeah, stay indoors, stay safe. Have a great time.